The following program is sponsored by MaxOut Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, MaxOut Savings Advisors, or its sponsors. MaxOut Savings Advisors and members of the MaxOut Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the MaxOut Savings Show with Ted Gioca, a presentation of MaxOut Savings Advisors. Now, here's your host from MaxOut Savings Advisors, Ted Gioca.
Welcome to the MaxOut Savings Show. I'm Ted Gioca, and we're talking savings and investments in your retirement here on the show. Our show is all about building up wealth, understanding the world today, and managing through it, managing through very tough times, challenging times. We got a fantastic stock market. Things are doing great. But you have to continue to sit there and manage over the long term. This too will pass. And typically you got a 25-year retirement window to hold the assets. And so we're trying to help you get to retirement, successfully build up wealth, and then manage through it. Our motto and philosophy is to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively, invest conservatively. This show isn't about 401k plans, but we talk about these always at the beginning of the show because this is where it all starts. You put your money away into a 401k, 403b, different qualified plans. You get a tax deduction out of it. So if you put in $10,000, you get a $10,000 tax deduction. The $10,000 grows tax-free for the next 25 years, 30 years as you work. And then once you retire, it continues to grow tax-free, which is, as we've pointed out on the show, one of the Warren Buffett, the greatest investor out there, absolute master at investing. If you study what Buffett did, he was remarkable in his ability to avoid taxes. He bought an insurance company, invested inside of it. When he would take positions in companies that they got taken over. He would negotiate to get stock in the new company. He never wanted to pay taxes. Well, the government gives you this for free. Take advantage of it. We suggest everyone take 10% plus the company match and just build up your wealth. That works out to be about 13, 14%. If you're in your 50s, the government lets you put more money away. And many people we find are behind their savings goals in their 50s. Now's the time to put away that money, take advantage of it. Take charge of your retirement and your life today. So what do we got here? We got the market is up nicely here. Really very concentrated in the tech sector. Stocks are going just crazy. Dell was up about 20. I didn't see the final number, like 25, 30% yesterday. The day before it was another stock. Huge moves up in some stocks. Interesting, a lot of stocks, food stocks, drug stocks, retail, the list goes, home building. A lot of these things, they're not going anywhere. It's a very, very narrow market. In all technology. It's a very, very hot market in technology. We have the AI boom. It's rivaled the railroad boom, the electricity boom, the car boom, the computer boom, the telephone boom, the internet boom. We've seen this before. And so you want to make money in these times, but at the same time, you don't want to get caught when the tide goes out, so to speak. And that's one of the things I think it's going to be real interesting to see. AI, is it real? Oh yes, absolutely. Is everyone going to make as much money as they claim? Absolutely not. And so you got to pick your winners. And some things are getting quite overvalued overall. Interesting thing is companies are all scrambling to get on the AI bandwagon. I think 6 months ago, we pointed out that corporations were, their conference call, they made sure they put the word in AI numerous times in the conference call and the stock would just go up. And it didn't make any difference what type of company, if it was an oil and gas company or a food company or whatever, they all said AI. Well, fascinating story this week. Anthropic said that there was one company spent about $500 billion on AI. I believe it was this month or last month, so far this month. In the last 30 days, they spent $500 million on AI, not 500 million building out AI data centers, but $500 million going to Chat GPT or Grok or Anthropic or Claude or whatever system they were using. And the rumor it was Amazon, and Amazon had a program. Everyone was going to go on AI, get on AI. They had like a board recording who was using AI the most. Well, evidently, it just skyrocketed the cost. And all of a sudden they woke up and they spent $500 billion and they had to cut back and stop using the product. And this has happened to other companies. One, I think it's Uber, said that they've already, as of, I believe, April, blew through their whole budget for the year for AI. People are realizing this is incredibly expensive to run. And again, if this is a major company, it spends $500 million in one, that's a $6 billion run rate. Think about that. And so the question is really what is being done to, how real is this thing? Is it real? How valuable? Yes, it's valuable, but the question is how are we going to make money? Are the cost of the computing? One of the things they're running into now is you can use Claude at Anthropic or ChatGPT or one of these big platforms and do all this fantastic stuff, solve great drug problems, basically plot the future of humanity for the next million years or whatever. But what they're finding out is that that in China has DeepSeek and other programs. Sometimes it's 1/10 of the cost. And so this is, again, something. The question is, how much are they going to pay for this stuff? And how much is because remember, China subsidizes their energy business, and so they can, and they're not using the most fastest. They're not using the Blackwell chips. Their chip isn't quite as good, but it's still pretty good for if you're trying to design a program to calculate the addition of thorium into a nuclear weapon and the explosive power. Maybe you need the Blackwell at the high speed, but if you're basically sitting there in running some type of system at your company, you don't need the fastest chip. You need some basic workhorse type of thing. And so we're starting to see some cracks appear in the AI thing out there, like, hey, what's going on? There's starting to be real big pushback on the AI centers. They're realizing how much energy they use, how much electricity, which runs up electricity costs. In addition, how much water. If you really look around, people will tell you, you look in the future, what's the biggest shortage? It's really not going to be energy. It's going to be water. And yet you got these AI centers burning through, water. You could look up one day 100 years from now and the United States has no groundwater left because we used it all up on AI facilities. And so they've got to kind of calculate those out. Some areas have more water than other areas in the country. And But there's starting to be some problems with AI. The costs are starting to skyrocket for the build out of these programs. It's getting harder to get them built out. There's, people are complaining that there's just a lot of very low frequency noise coming out of these things that people have to deal with. I mean, you're producing electricity. You've got pumps going. You've got air conditioners going. You've got just massive amounts, and the amount of energy and water these things use rivals a small city, in some cases rivals a state. I mean, think about that for a second. In some cases, it could be twice as big as the state. And so we have we've got a huge build out. This is, kind of like we said, the railroad, like the telephone, the electricity, and money is just being thrown at it. There's infinite amount. One of the things that's in the past that if you look at the railroad boom, if you look at electricity, there was a limited amount of money they could use. There was so many gold coins or so many silver coins in the country. Maybe they could make some more at the Treasury or do, but they didn't have infinite. One of the things that's been different about this one is with the Federal Reserve, they can infinitely print money. And, people say, well, they don't print money, or the Treasury can infinitely borrow money. And there's just infinite money out there. And the danger with that is there's no self-correcting mechanism like in the capitalist system where you start spending too much money, you start going, we're going to have to allocate the money a little bit, or we're going to have to raise interest rates because, we just can't afford to fund everything. We can't afford to put, 20 railroads across the United States of America. There's not enough money to do that. Well, in the world today, yeah, there is enough money because they just print the money out of the sky, but that's causing inflation. And then you couple that with the Iran war that seemed to have, popped up out of nowhere, and we have an inflationary environment. So these are some of there's a lot of cross currents in this market right now, but underneath it, there's enormous amounts of speculation. There's speculation in AI stocks. There's speculation in options, in calls. There are enormous amounts of speculation out there. And look, there's a lot of money being made. I mean, we're pretty happy at MaxOut Savings Advisors, but in these type of environments, it's important to really keep an eye on your risk management, because that's when people get sloppy. When you're making money, things are great. This will never end, and people keep levering up, borrowing more, getting more risky, going further out on a limb, and then all of a sudden it collapses. And so I think more than ever, we talk a lot about risk management on this show. We make our money on the way up, and we also, I believe, we really make our money at MaxOut Savings Advisors on the way down, managing through, and we've been remarkably successful at doing that. So we're not giving it all back at the end of every cycle. And if we can kind of stay, close to the level we got, do a thing, and this time it's going to be tough, but we've done it in the past. I believe we'll do it again. So you want to manage that risk in this market. And so one of the things today we really wanted to just touch base on was really, hey, are you looking at your risk management? Are you too far out there? Again, when things are going up like this, I think I made the comment on the show last week, we're talking to a friend of mine is like, well, why is this stock? It's too cheap. I can't believe it. This is such a good value. And I'm like, yeah, you can make 10 or 15% on that, or you can go buy, whatever computer company or AI company and make 30% in the month, and it's forcing money managers to go over to the tech sector and pour more money and take bigger and bigger risks, even though that 10 or 15% return is a really good return, particularly shorter term. It's like, well, that's not, and it's really skewing the market. Enormous speculation. I haven't seen this since 99. I think you got to go 99. I think you got to go to 1960s, and I think you got to go to 1929 to really to see markets with this type of speculation. Does this mean the market's going to crash at like 29 next week? No, but it does mean it's one of the more speculative markets we've seen. And we want to be cognizant. So there's a balance, and in that balance, you want to continue to manage. This is your retirement, and remember, this isn't like your retirement is not like a speculative thing where it's like your trading account. You can This is your retirement. This is your standard of living in the future, and so you want to conservatively manage that in this environment and not get kind of sucked into the frenzy that's out there. And again, does this mean we're not in the AI stocks? No, we're playing it numerous ways, but at the same time, we're probably watching things much closer now, just because we're cognizant of the potential risk, the opportunity, and the potential risk in this market. So, tell you what, let's take a quick break. Some real interesting things happening in the next couple of weeks. We want to discuss that. What's happening? We're going to discuss Iran, which is just like a never-ending thing. As well, we'll be right back right here on the MaxOut Savings Show.
Ted Gioca and the MaxOut Savings Show continue after this short break. To find out more about MaxOut Savings Advisors, visit MaxOutSavings.com. In a moment, more of the MaxOut Savings Show.
I'm Ted Gioca, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioca can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 1033, The Answer.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
The Big 1070.
And now, more of the Max Out Savings Show with Ted Gioca.
Savings Show. Welcome back to the MaxOut Savings Show. We're talking savings, investments, in your retirement. You can give us a call at 713-339-1070 here at the show, 713-339-1070. We'll be happy to get your questions answered. We'll see what we're looking at. Well, we're talking about the markets here. Very hot market. A couple big things. There's a lot of IPOs starting to happen out there, and typically near market tops. Markets thrive on money coming into them. So when the markets are going up and AI is going up and Micron goes up 20% in a day, or Dell goes up like 25-30% in a day, people go, oh, wow, I've got to get in here so more money comes in. Now, on the flip side of that, it's when money comes out, people are worried about the market, they lose money, or if IPOs come in, that brings more stock onto the market, which is the supply side. And we've got some really big supply coming onto the market with SpaceX, with Quantinium, OpenAI, as well. There's a number of these big deals coming out there, and they're very large. And so this I think this thing is going to change the market this week. But let's take a call, a quick call from Frank. Hello, Frank. Welcome to the Max Out Savings Show.
Hey, good morning, Ted. I really appreciate you and your program. And I'm wondering about a pumping on perhaps. Yes, sir. Can you hear me?
Frank, you there?
I'm there. Can you hear me now?
Can't wait. Now, by the way, as we get Frank online, we're now starting to YouTube. We're kind of doing the beta test on the video, and this is why it's taken us a little time to get this together. Within the next week or so, we're going to be on YouTube as well, and you'll be able to pull up the video right off of the AM 1070 website. Do we have Frank? This is live here, and so. Okay, well, we'll try to get Frank on. They'll let me know when we can get Frank back on here. But talking about, so what's going to, the SpaceX is a big deal. And the SpaceX is not just launching rockets going to Mars, but it's also the Starlink satellite systems. It's also the ChatGPT X. They launch about, I think in the last 12 months or last year, it's been about 87% of all the payloads on planet Earth have come out of the SpaceX system, which is remarkable. That includes China, Russia, everybody. We saw how tough it is to for the blue, to launch a rocket. The Blue Origin rocket blew up the other day. That's kind of set back our program going to the moon. Seems like we always have a problem going to the moon for whatever reason, but I won't go there. But so it's a big operation. They're going to try to raise the valuation about $1.8 billion. Enormous support. I think one institution came in and wanted 15% of the deal. It just shows you the demand we have out there for SpaceX. The problem is they're going to try to raise about $75 billion, and then there's going to be more people coming in to buy it after that. So that means $75 billion has to come from somewhere else. And what they're going to do, I think, in the August earnings, another 25% of the stock is unlocked. At that point in time, we'll probably see some institutions add it to the system. And so, okay. Thank you, Mark. I just had someone text me something. We'll try to work out at the next break to see if we can get the phones to work right. But so with they got to get the 75 billion. There's 20% coming on, and then there's some other unlocking as well with it. And if you look at it, it's pretty much of a there's a lot of stock that's going to be unlocked, and then they're going to add it to the indexes. Now, keep in mind, it's a $1.8 trillion company, which means ultimately the indexes are going to want to own a bunch of it, which is hundreds of billions of dollars worth of stock, which means they're going to have to sell. If they add it to the QQQ, if they add it to the S&P 500 or the Russell 1000, that means they're going to have to sell. It's going to be a certain size, a big percentage of portfolio. They're going to have to sell their Apple. They're going to have to sell some of their Micron. They're going to have to sell some NVIDIA. They're going to have to sell some Microsoft to get it in there. And so that's going to there's going to create selling, but it's not. Look, there's Quantinium coming out. There's one stock we had. They announced they're doing a secondary of, I believe, 13 million shares coming up. The stock fell. It's just there's everybody is lining up the door. The markets are very hot right now. The valuations are very hot. Everyone wants to come start selling stock. That means all this money is going to be all this stock, not money, but stock is going to be coming. Remember, it's supply and demand. So we got a lot of demand because we have all this money. People want to get into the AI trade and they're investing, but there's also the supply is now starting to come in. So we had a fix for a long time. Pretty much we've had a fixed supply with just a couple new offerings. Now we have these huge, so the supply and demand equation is changing, but the supply is coming from new issues. And this could put a top in on the market. I think at a minimum, it's going to cause at least some consolidation in the market. It could cause a reasonable correction because, again, where does this money come from? And they have to somehow shut down the supply pipeline. I mean, there's probably 100 companies out there. They're not all as big. They're not all as big as SpaceX at 1.8 trillion. They might be a $5 billion company, but there's 100 of these things coming out there. And so it's not SpaceX, it's OpenAI, it's Anthropic. There's a lot of there's a whole bunch of other ones out there. And so that is supply coming on the market. So again, what we got to do is watch this closely and see what happens over the next couple of weeks. I think in the next 2 weeks, a lot of these deals, starting in June, they're all going to come out. There's kind of a window, and we said on the MaxOut Savings Report this week, I think we said it last week on the show too. Look, Wall Street's going to try to hold this market up. They want this market to be up for these new issues. We're talking about probably about $500 million worth of fees, $500 million worth of fees. Now they got all the buyers ready to go. There's probably a line to buy at least 1.5 times the amount of stock available in Tesla. They probably already have the list right now from the institutions, but all they need to do is hold the market up. If the market starts going way down, people go, whoa, maybe I don't need this SpaceX, or I'll cut my position in half. And so they have to hold the market up, and they can get the, okay, good. They're going to sit there and they want to hold the market up and so they can get as many of these new issues out there, because a lot of these companies, they need to go public. They need money. Okay. They want to come public. There's enormous fees, hundreds of millions of dollars worth of fees. And so this is kind of what we're in. We're in this kind of choppy area right now. So you want to be a little more cautious. Now, if you've got a question or comment, give us a call at 713-339-1070. Again, we're just now doing video. So, Nikki's going to sit there and we're going to type out the questions to me, and I'll get your questions answered. 713-339-1070 on AM 1070 KNTH. So what else do we have here? So I think this could slow the market down some. So we want to be a little cautious here. What we want to start watching, what we're watching closely is, does this market broaden out? Again, it's been a very narrow market. I saw a statistic here the other day about the statistic was on the, let me see. Okay. Also, we have a caller ask about Rocket Lab. We'll get that after the quick break. That'll give me a chance to check that one out. Of all of them, SpaceX is the best. I mean, you really saw this week with the Blue Origin. The rocket blew up. I mean, it was a test rocket. I was down in Port Isabel for the launch of the first Starship rocket, which is just incredible. If you get a chance to go down there, it's right on the beach. You can get to go swim in the ocean. You can drive by the facility down there at SpaceX, and one of my friends was with me, and he studied this very, very close. He said, look, they think there's about could be up to a 25% chance the thing blows up. I mean, these things are very difficult to do. I think Elon Musk has done a remarkably good job of testing things out and in really simplifying things to minimize some potential breakage points, but very complicated. And that's a problem with all the other stocks. But let me just take a look at the chart on Rocket Lab real quick, actually. Okay, what we're going to do is, so what, I'm going to wait till after the break on that. We'll get that question answered. Again, this is I'm really excited. We're going to be on YouTube. We're doing video now, and that's taking it's a somewhat of a learning process here for us. But what else do I want to come? So getting back to the markets. Markets are very high right now. The Dow hit a new high. They didn't have any stocks that hit a new high. And if you look at some of the other stuff out there too, it's just some of the things that we're seeing is that the breadth is very narrow on this market, and really you rarely see these type of things. And so what we want to do is we want to see the breadth speed up. Look, if you look at some of there's value out there in this market. If you look at some of the food sector, it's really beaten down quite a bit, paying good dividends. We're in if you look at some of the drug sector, we talked about Novo Nordisk a while back. They're in these Wegovy, Ozempic, the pills, but they're cutting the prices. Stock is down, but if you can cut the price low enough, it becomes a franchise, almost like cigarettes or Coca-Cola, and that's what we're kind of thinking there. The valuations, home building, very cheap. The question is, what's going to happen with the interest rates? And we're starting to see some. We're starting to see some movement up in that sector, but it's these stocks have been going down for a long time. If you look at anything from a Lanier to a Home Depot, it's just not been a pretty picture. And so the stocks are down. And so the question is, are we going to get that broadening out in the market? And the other thing we want to see too is going to be interest rates. Right now, we sent out our MaxOut Savings Report this week, discussing. I've got a copy of it right here in my hands, and discussing the movements up in interest rates. And if you look at the Japanese market, has gone from about 2% to 2.8% on the 30-year. The UK market, this is just recently, UK gilts have gone from 4.25 to 5.15, a 22% move, 40% increase in Japan. The same thing. We hit 5.14 the other day on the 30-year treasuries. Interest rates are going up. At the beginning of the year, we were at about a 4.1%. Excuse me, on the 10-year, hit 4.7. It backed off to 4.45. The question pretty much peaked when Federal Reserve Chairman Warsh got in there. But then the question is, what is he going to do from here? And where do we go from here? And I think that's going to be one of the real key things. So what's going to happen with the bond market? And we write about this in the MaxOut Savings Report, which we just sent out. If you didn't get a copy of it, by the way, go to our website. Just go to your spam filter, check your spam side and see if it's in there. It's MaxOut Savings Report. If you're not on the list, just go to our website, maxoutsavings.com, sign up for the free report, maxoutsavings.com. But we talk a lot about what's going on with interest rates in the markets. And the problem is it's twofold. We have a $38 trillion budget deficit right now, and this is an issue, and so not budget debt, but debt, and we have about a $2 trillion deficit. And as we talked about in the show, President Trump, Treasury Secretary Bissett had a very good plan, a combination of tariffs, of growing the economy, of the Doge to cut costs, because they had to do it because Congress is incapable of cutting costs, of cutting interest rates, and that's why he pushed so far in interest rates. And it kind of all blew up with the Iran war. I mean, it was actually, we were like golden in the MAGA movement, and they had, I mean, what is not well understood is they had a very good plan in place. I mean, these people aren't stupid, and they realize what they're dealing with, and they realize they have to get the deficit under control and maintain confidence in the United States dollar, in our treasuries. And the Iran war came in, interest rate, I mean, oil prices have gone up, and that has affected the inflation, and so that is causing us problems. If you look at the latest inflation numbers, with the PCE just came in at it's been at 0.4%. That's a 4.8% average rate. If you analyze it, that's way too high. We clearly have inflation. It's averaged about 3.8% so far this year. Oil is a building block for everything out there. Then you add in such things as aluminum, helium, fertilizers, and other things as well that are blocked up in the Persian Gulf, and it's causing inflation to go up around the world. I mean, we're in pretty good shape in the United States. I mean, honestly, we don't have any shortage of oil and gas. We're not in like Thailand or Indonesia or places like that where they're having to ask people to work from home or have gas lines and those type of things. We're making more money on our oil and gas exporting, and we're exporting more, and it's balancing. It's helping our trade deficit. But other countries, it's much tougher. So we have a global inflation situation. And I mean, farmers, as we talked about here, farmers are struggling, but wheat prices are going up, corn prices, cotton. And what happens is when the price of diesel fuel goes up 40% and the price of fertilizer goes up 25, 30%, that farmer, is he quit planting? No, but if he's got 1,000 acres, he might, 100 acres on the top of the ridge or something that really doesn't produce much, he's not going to plant it. And so you're going to get less production, and they're not going to put quite as much fertilizer down. So you might not have quite as good a crop because they're trying to manage their costs. And so this inflation is starting to spread everywhere. And this is, so what Secretary Bissett and what Kevin Warsh is going to have to do is they're going to have to come up and say, hey, we have a plan to sit there and get this under control. We're not cutting rates right away. We're serious, and to convince people. So once people have confidence and once they see the plan start to work, the interest rates, particularly in the short end, are going to go down. Initially, I don't think that's going to happen. Both of them are very aware that the first 3 months of 3 to 6 months of a new Fed chairman's tenure, they're tested by the markets. They're tested like Alan Greenspan. Interest rates went up to about, on the 10-year, went to about 7.5%, 8%, and it caused the stock market crash in 1987. That was like 2 or 3 months after he got in power. So we got a new Fed chairman. Same thing is going to happen. So we want to watch this closely, and we want to see, where do we start moving out? How do we handle the bond? I think there's going to be opportunities, and will the bond markets at higher rates hurt the stock market? Something to think about, and we're going to expand more about that in the future in our next couple Max Out Savings reports. Tell you what, let's take a quick break and be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioca will return shortly. To speak with Ted Gioca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hi, this is Ted Gioca of the MaxOut Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, that helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.
We return now to the Max Out Savings Show. Here's Ted Gioca.
Welcome back to the Max Out Savings Show. Looking at what a question about Rocket Lab. Looking at the chart, look, the stocks had a big move up here. I mean, this was $40 back in December. It's $143 here. With all the hype on the SpaceX, it could go a little higher. I wouldn't buy any here. I'd wait for a pullback on that one. I haven't really studied the fundamentals of it, but that's just something to. That's just my thoughts on that. If you got a question or comment, you can give us a call at 713-339-1070, and we'll get your questions answered here on the show. Well, so where do we go from here? I mean, I think the SpaceX is hot. Space is very hot as the Rocket Lab is up. Look, what I think is going forward is, I think we're going to have some type of shakeout somewhere in here in the next couple months on the AI. I think going forward in the next year, the area that I think is interesting is going to be robotics, it's automation, those type of areas I think are interesting. I think housing, if we can get some type of drop in the interest rates, I think there's a lot of money in the world. I mean, if you just look at these numbers, they're just incredible. The SpaceX alone is like 4,000 millionaires have been created on that. And it's just there's enormous amounts of money out there, and so I think what we're going to see happen is really we'll see if that money spreads out and to other areas in here. And like I said, I think if we can get some confidence, if the market sells off, that could cause interest rates to drop, which is what I think they'd like to do. But I think going for, like what we're looking more is robotics in here, those type of areas, which I think are going to be interesting. Automation, and then the people that are making the actual the commodities that are needed to come into these things. If you look at copper, there's really going to be a shortage of copper going forward. But copper, the different gold, copper, silver, zinc, those type of things. We're in the middle of a war right now with Iran, and if the war ends tomorrow, you still have we have defense plants that have orders out probably 10 years for many of these companies. I mean, it's so bad that President Trump called the defense manufacturers in and said, this is not acceptable, for me to have to wait 10 years to rebuild our stockpiles. We want to see new factories. We want to see you guys increasing. We want to see it. And if you look at it, defense companies haven't gone up since then, because he's like, look, I don't want to hear about your earnings, and I don't want to hear about your stock buybacks. I want to hear about new plant, new equipment. I mean, the idea that we have to wait, 7 years to rebuild our supplies of rockets or whatever after this war is ridiculous, when we could be facing a war with China. And so that they got the message. So automation is going to help that. If you look at AI, this has kind of gone off the deep end with the AI, and where the AI is probably more valuable is robotics. Honestly, if you can sit there and get a robot to walk around and clean the house and mow the lawn, I think people will be shocked how many, if you can sell them for $30,000, I think people will be shocked how many of those things they sell. As dumb as that sounds, but if you can get them working in factories, then the United States, we should be able to compete with anybody in the world, because we can afford to pay the workers more, because we can move the factories back here. You couple AI with the robotics they've done, then you can do some of that type of stuff. And so I think that's where the interesting thing starts to happen. They're going to be moving you can actually be, your PC will be almost like an AI system in the future. But the robotics are going to be one of the key things. And so automation, I think we're going to see a lot of, it's very frustrating. We've been looking at the automation companies, and if we look at the parts of these things, it's shocking how many of the parts are being made in China, like some of the different types of pieces. It's China and Japan. Tesla has two different sources, one in China, one in Japan, and they're not being made here. So I think this manufacturing renaissance that President Trump is really counting on to build this economy up. He went over and stole the playbook that China used to steal all our factories, and brought it and is using it to help out the United States. And the Democrats are all going wild because of it. But honestly, you have to fight for the American people, for their jobs, and for their national security as well, which he's managed to do. And so what's kind of happened is that these are, again, this is another leg of that multi-leg stool to get our interest rates down. If you bring back the factories back, you get jobs in, you get manufacturing, you get tax revenue coming in, and your deficits go down. So there's a lot of things happening out there, and so we just have to sit there. We have to get through this Iran war. We get oil prices back. They're not going back down to $50. That was just kind of ridiculous. And one of the things that's most remarkable about this, and we write about this in our MaxOut Savings report, is, look, I actually called it Groundhog Day, because every couple days it's a new thing. The war's about to end. It gets a little tiresome if you're in the investment business, because it's kind of a black or white situation. But what he has done has been absolutely remarkable. Him and Secretary Bissett they're like, it's the markets are about to open up Monday morning. Oh, look, we're close to a deal. Or oil prices start breaking out higher. Oh, look, we've got a deal. We're waiting to hear from the Iranians right now. And every couple days, or at least once a week, we have an imminent deal. This thing is solved. Well, if you're a speculator, I'm not going to go buy a cargo of oil tanker, hoping I can sell it and buy it for maybe 110 and sell it for 130, because I know we're running out of capacity out there, and the stockpile's going down. Because I might do it, but I'm like, Trump's about to get this deal. I'm not going to do that. So I don't buy that tanker of oil. And what he's doing is he is keeping the speculators out of the oil markets. It's a brilliant strategy. I think people are going to study it, decades in the future about how they're able to do this, because we're very short on oil and gas. Our supplies are going down. China, one of the better spots on this, is really China. China has said, look, we're cutting oil production, and so we don't need as much oil and gas. So they're not importing as much. But you're like, wait a minute. They're looking at the satellite data, and you can see the cars and trucks going up and down the road. And like, hey, there's no slowdown. So how is there dropping oil prices or demand? And what we're starting to understand is China, being China, they're much more, they're long-term thinkers, unlike the United States, which goes quarter to quarter. I mean, that stupid jackass Biden emptied out our reserves. I mean, I'm sorry for insulting the guy, but he emptied out our strategic petroleum reserves, and now here we are, in a tough situation. Well, the Chinese, we are realizing, have more oil and gas than we in reserves than we realize. But what's happening is that we still are short on oil and gas out there. President Trump has been selling it into the market. And he's also made deals. It's like, yeah, I'll sell you this oil, but we want it back in 12 months or 15 months in the future. And so it's going to be put back into the reserves, and it also is going to create demand down the way. But understand that we're running low. These reserves are running down, and we can't go on for another month. If we go on for another month with Iran, I think you're going to see oil over $125 a barrel. I mean, if China starts needing to import more and start kind of running low or getting nervous and start buying more, you're going to see $125 oil or more in these markets. So we need some type of deal in with Iran. So what I want you to understand is Trump has done a remarkable job at keeping these. I mean, it's 80 something, $89, $87, $88 today. That's unbelievable. I mean, because yesterday they launched a rocket supposedly a couple days ago and hit one of our Kuwaiti bases, injuring Americans. And yet somehow they managed to convince the world that, hey, we got a deal. It's about to happen. We've been hearing this for 6 weeks now. And so I don't think you're going to see oil collapsing. They're going to have to rebuild the stockpiles in the United States, in China, in countries in Japan, and the rest were like, oh, whoa, we had no idea we needed a stockpile. So they're going to have a stockpile of oil and gas. And so I think energy is still going to be, and there's still such demand with AI for natural gas. We still like the sector overall. And I think this is something we're going to see. I think right now we're kind of we've got the SpaceX IPO, and I hate to keep talking about this, but this is a big deal. I mean, 1.8 trillion, but it's a part of a huge surge of IPOs hitting the market. We saw this in 1999. That's what kind of capped the market, is all of a sudden all the supply comes on the market. And and think about all these people. There's people with enormous, I mean, honestly, you sit and look at it, and we manage a lot of money at MaxOut Savings Advisors, and enormous amount. And I look and I see what some of these people are worth. I'm like, my God, that's a lot of money. And it's just, eventually these people are going to want to start selling. And the question comes in, when that happens, who are they going to sell to? And that's the thing you want to watch in here. So we want to see, what's the supply going to do? A couple things in here. The 3-year treasuries you can get, or corporates, you can get like 4% on those. So that's not a bad place to put. Again, we're long-term investors. This is retirement money. If you want to go hire us to go speculate in the markets and have huge returns, we're not the people. Although honestly, we did do it last year, but we're managing conservative money in the markets. I mean, I was just listening as I'm waiting to come on the show, this thing about, we don't do annuities at MaxOut Savings Advisors. We do stocks and bonds. The problem with annuities, if something goes wrong with the annuity company, I've got my whole retirement in there. It's in danger. I've been in this business a long time. I've seen insurance companies go under, and I've had clients that had annuities, and they're like terrified of what to do. We never sold annuities. I don't think, maybe I sold one, but I don't think we ever did. And because for our clients, we want to own stocks and bonds. We're bond part. We're looking at bond. We're trying to get bonds that, hey, if there's a depression, these bonds are going to make it through. That's our line of thinking. We want to try to have as much protection in our portfolios as possible. And I can get most of these bonds yielding pretty darn good rates. In the type of we look at ratings. We also look at specific industries because we know what. When economies go bad, we know what industries go bad. We don't want to be in those. We want to be, so when things go bad, we might lose a little money, but we're way ahead of everybody else. We want to own as much close to the assets as possible. We don't want insurance wrappers. We don't want annuity wrappers. We don't want anything. We look at, because we're trying to manage people's retirement money. They depend on us. And I think that should be your strategy too, is you want to think about what you're doing. You want to manage your risk, as we've talked about the show. It's a very good market, a lot of money being made. Don't let it go to your head. Remember, this too will pass. Think through, continue to keep your risk management programs in place. Don't go out and lend and don't go out and leveraging up your portfolios. Because your next door neighbor just made a bunch of money in some hot tech stock. And so there's money to be made. You want to be there, but continue that risk management. A couple thoughts here. We send out a newsletter. I have it right here, the MaxOut Savings Report. And by the way, we talked about it, most recent one. The first thing we talked about, our savings rate is down to 2.6%, which is it's the lowest in years. Which don't let yourself be in that group. Continue to save aggressively, invest conservatively. But you can sign up for the report. We talk about the SpaceX IPO, all types of stuff. It's completely free. We don't send you anything. We don't call you on the phone. It's just we send you the email once a month. It's the MaxOut Savings Report. In 2007, we said investment banks were going to fail. We put it in the report. We showed you the balance sheet at the time and said, look, this is what was going to happen. And we were right. So if you need some help, go to our website, maxoutsavings.com, sign up for the free report. You can also get our email and phone number and give us a call, set up an appointment. We'll sit down with you and show you how we manage retirement money at MaxOut Savings Advisors. It's maxoutsavings.com. That's maxoutsavings.com. And also, remember our motto and philosophy, which should be yours as well if you want to build up wealth, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth. Save aggressively, invest conservatively. If you're not there yet, now's the time to change. Take charge of your retirement. We'll see you next week right here on the MaxOut Savings Show.
This has been the MaxOut Savings Show with Ted Gioca, a presentation of MaxOut Savings Advisors. Join us next Saturday at 10 a.m. for the MaxOut Savings Show with Ted Gioca on AM 1070. The Answer.
This is AM 1070.